drum roll, February 12th, on these vaccine hopes that continue to drive the market. And for more on where we go next, let's bring in Greg Branch, managing partner of Veritas Financial, and Larry Adam, chief investment officer at Raymond James. Greg, Bob Pisani was just outlining what he, I think, was saying sort of elliptically, is a rotation in the market away from big tech or tech and towards some of the more unloved sectors. Do you see that as well? And do you think that's a trend, an indicator of what's coming into 2021?
I do see that, and I'm on record as having talked about this for many months now, that 2021 is likely to look a lot like 2010 to 2012 looked, where we saw cyclicals, value grow faster off of a bottom than tech was. And sure enough, consensus next year expects for tech, outside of a few discrete components, to grow around 15%, while it expects the broader S&P minus tech to grow at 35%. So it's hard to maintain a premium multiple when other sectors are just growing, quite frankly, much faster than tech or typical growth is. So yes, I think now is a great time to go value shopping, to look for things that are on sale, that have triple-digit earnings growth projected for next year, and in many cases also have a healthy dividend to offer as well.
We're talking banks, we're talking energy, we're talking some of those unloved ones. But Larry, you say tech is no wreck and is a good place to put some money, even at today's valuations, and you're not persuaded that the value play is ready to roll.
No, I still prefer the stay-at-home names as opposed to the reopening trade because, you know, first of all, this economy is going to struggle over the next couple of months, and I think that's going to be more hurtful to those more economically sensitive sectors. I think fiscal stimulus is going to happen at the beginning of next year, and I think what's important is that if you look at the history of what happened when we got our first stimulus, what was the money spent on? Consumers spent on technology and healthcare. And then I'm not necessarily in agreement when it comes to valuations. When you look at some of the valuations of those reopening trades, you know, airlines and hotels don't even have earnings projected for next year. If you look at energy, it's trading in its 90th percentile. Restaurants in the 80th percentile. You look at some of the other areas like communication services, it's only in its 16th percentile. So you get much better valuation still because those earnings have kept pace with some of the price action that you've seen.
Greg, you want to respond to Larry?
I do, actually. So stock picking and sector picking is important. I certainly am not arguing for any wholesale buy value. And so there are financials you can get that are trading at half their typical price to tangible book. There are certain consumer discretionaries, that are trading at half their historical average in terms of valuation. So stock picking is important, and he brings up a good point. Airlines is not something I've advocated. Cruise lines is not something I'd advocated because we just don't know what their business looks like next year. But there are business models, such as casinos that are levered to Asia, where we can predictably see what their business is going to look like next year, where we can see that they'll swing from a loss this year, to $3 a share in earnings and a $3 dividend on the low end of expectations next year. And so some things you can reliably see into, some things you can't.
Larry,
I would add to that, actually.
You point to... Go ahead, Larry. Let me finish it up with you. I mean, we just showed some airlines, some cruise lines, etc. They must be moving up purely, I would say, purely on the vaccine hopes. And will the vaccine plus stimulus equal a very nice 2021 for stocks?
I'm optimistic longer term on stocks. I think you will have an earnings rebound. I think once we get through that first quarter and we do have access to the vaccine, I think that'll help with the recovery more broadly. There's still plenty of cash on the sidelines. So I think we're setting up for a pretty good 2021. And I would think that there's still some other catalysts out there for some of the sectors that I mentioned. Don't forget, you got 5G, you got e-commerce growing. And for healthcare, we're still going to be fighting this disease for a while. And I think it'll continue to help that sector as well. And the good news is that they're some of the biggest sectors within the S&P 500. So it should continue to drive it higher.
Getting frustrated with my 5G. I've had the 5G phone for a long time, but I don't seem to have the service yet. And so I'm about to give up. That's all I'm saying, guys. Greg Branch, Larry Adam, thanks very much. Kelly.
Thanks, guys.